and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. We also have Shell Bhatnagar with us on the show, and this is where we will help you understand the closing action on the day trade. About a 90 point of a cut now on the Nifty. We've slipped below the 25,000 mark as well. 50 further points have been slashed on that account. Most of the sectors have slipped into the red, especially led by the oil and gas sector, which is sharply lower by over 2% now. PSU banks have lost ground, 1.5% of a cut for that one too. Metals, auto, infra, realty, and even the broader markets. Now they've given up the kind of gains that they had in the morning trading session. What is still holding up? The FMCG space, the consumer durable space, pharma and mid-cap index. These are the only indices which are up into the green right now, and the volatility has further increased by 2.1% at 13.6 odd levels right now. Bajaj Auto is the top mover as far as the Nifty is concerned. We have the crude derivatives that are still doing well, stocks like Asian Paints that are up 2%, some of the FMCG and pharma names that are also buzzing. So stocks like Britannia, for instance, Sun Pharma, they're still holding up in trade. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. So Wednesday, the second session is not working to the advantage of the bulls as far as the Lal Street is concerned. Remember, we are also on the weekly expiry of the Nifty Bank, which itself has slipped 200 points on the trot, 51,070 for you. Let's look at stocks that are sort of pulling the Nifty lower and then try and understand why that's happening. Tata Motors, not only is it the top contributor in terms of negative points, 27 to be precise, on the Nifty, it is also the top traded counter on the NSE 500. About 2,700 crores worth of shares have been traded, and there is a downgrade that has come on Tata Motors from a major brokerage, citing margin pressure, citing inventory pile-ups of passenger vehicle stocks, and this is why you see this 5.7% cut on Tata Motors, now firmly below 1,000 rupees. So that's one reason. And what is the other contributor? It's Reliance, 17 points on the downtick for the Nifty. L&T bringing in another negative 15 points, and of course falling crude oil prices have just turned the tables on the negative side for ONGC. 284 down 4% today. Remember, this was one of the stocks that was talked about very well in terms of long-term gains. Yes, it still sort of becomes juicier still, but with crude oil prices dipping to below December 21 levels, you see this negative sentiment building up on ONGC. SBI itself has contributed 10 points in the negative terrain for Nifty. What is pulling the Nifty up is Bajaj and Bajaj all the way. All three stocks, Bajaj Auto record high, Bajaj Finance 1.4% higher, and Bajaj Finserv is also a percent higher. All these three stocks together are bringing in about 14 plus 6 plus 1, 21 points to Nifty's positivity, and that is all because today is the last day of Bajaj Housing's IPO, which now draws to a close. 6,500 crore rupee IPO, which is open for subscription, in which Bajaj Finance is the primary seller in the OFS, and of course shareholders of Bajaj Finserv and Bajaj Auto also have the chance to apply into for the IPO for confirmed allotments. Now we have Mr. Vineet Bojlinkar joining us, Head of Research at Ventura Securities. Good afternoon, Vineet, and a very warm welcome. Your quick view on Tata Motors. Is this selling overdone, or is this the right way forward ahead of the festive season, when you see so much of inventory piled up in terms of passenger as well as commercial vehicles at dealers' end?
So, there are multiple headwinds that this counter is facing. One is obviously the inventory pileup. Second is, freight is visibly now moving to the DFCs. So the need for long haulage trucks is also coming down. Third thing is we can see I EV SOPs expire. And fourth is, JLR made bulk of its moves on the back of their three models, which had got, reducing discounts. And now that is kind of fading away. So, a lot of negatives coming in. Margins could be under pressure, volumes as well as realizations could sink a bit. And with this, I believe the stock, this year will have a lower EPS than last year. And considering that, there would be some adjustments happening in the price, I think 850 to 880 is the price band where Tata Motors would start looking attractive again.
Auto, sir, what do you think is fueling fire within Bajaj Auto to record highs continuously? And for those who may be still contemplating to include Bajaj Auto in their portfolios, is it too late?
So, I think one of the counters within the Bajaj group, which should do very well, is going to be Bajaj Finance, because, the consumerism is really playing out. Just look at the way AC growth is projected to happen. Same is going to be the situation with other consumer durables. And when you remove Bajaj housing out of the pie, what you are left with is only the consumption piece. And so I think Bajaj Finance will do well. Bajaj Finserv obviously has tailwinds of the insurance pack. And Bajaj Auto is doing well because, now people will move from four-wheelers to two-wheelers, because two-wheelers is a secular growth story over the next couple of years. And hence all Bajaj counters are a win-win out here.
236, ladies and gentlemen. Let's just take a dip into Bajaj Auto. Some very exciting things are happening on this stock. Needless to say, it's at a record high. But within the EV space, you see state-wise data in which Bajaj Auto has gained market share in Maharashtra, where it is already the number one player. And of course, in Gujarat, it has removed TVS Motors from the second slot. So these are two positives for Bajaj Auto. And about 2 weeks ago, the management had told media organizations that it hopes to sell 100,000 electric two-wheelers in the festive season each month. To you, Vineet, are the charts and valuations at Bajaj Auto overstretched, or are good times continuing to roll?
See, if the EV bandwagon in the Bajaj group catches on, what is going to happen is that the ASPs of the EV portfolio are going to be very strong. Obviously, an EV two-wheeler sells for much higher valuation than a ICE engine vehicle. And so if margins are, they're able to sustain margins across both the types of vehicles, then, you'll see faster growth in the overall revenues, despite volume growth being, sustained. So I think that the excesses are not done on Bajaj Auto, and there is a brighter future going on.
So, Mr. Polinchkar, when we talk about the EV opportunities out there, we also just saw yesterday how Ather Energy has now filed the RHP papers backed by Hero Moto. So the EV plays are probably now gearing up after Ola Electric successful listing to probably test waters there too. How do you see this space, throw some opportunities in the near to medium future for investors, and where would you keep your focus?
See, we have to understand a couple of things. Is that, simply being electric will definitely help you. But, having a balance of both portfolios helps keep your G&A cost much under control. So to that extent, Ola will now be having a little bit of losses, which will be minimizing over the head. But, the stock has moved far ahead of fundamentals. And, we have a target of 145 on the stock by FY27. But if you see the other 2-3 stories, that is Hero, Honda, Bajaj and TVS, I think they are better placed than the other pure EV plays because they already have a distribution network in place, and all they have to do is roll out new products where the cost will be much lower and throughput and ramp up is going to be very aggressive. So these players were waiting for Ola to come in and fuel the market growth, and now these players are getting into their act, having seen that the momentum is on the upswing.
Okay, ladies and gentlemen, that was a lot about two four-wheelers and six-wheelers, but let's get into stock picking, and I'll request the PCR to kindly fire the chart of Marksans Pharma. It was on 28th of August that Mr. Bojlinkar was with us when the stock was at 238, and between then and now it has hit a record high of 279. Even at that point of time at 238, the stock was at a record high, and Vineet had pointed out to the hidden potentialities of a multi-bagger even from these levels. Vineet, that was a great call. Now at about 270, 280, is it still worthwhile to get into Marksans Pharma afresh? Would you want to revisit the investment thesis?
No, so our investment thesis is intact, and the valuations are getting richer. Our target for FY27 on Marksans Pharma was about 270. So this based on what empirical evidence we have done with our modeling, we believe that there's a comfortable 10% upside, but it would come over a longer period of time unless they announce a merger which is going to happen, or a takeover in the European continent. So to that extent, I think the stock is reasonably well.
Okay. Let me draw your attention to some other spaces that are at record highs. We've discussed Bajaj Auto, but Info Edge and Zomato are also at record high levels. Remember, Info Edge also has a stake in Zomato as well. How are you looking at Zomato at 274? Do you still feel that there is enough and more steam left for those who are enthusiastic about this e-commerce play? Can they still take an entry at these levels, which is at a record high?
So, our target on Zomato was around 270 again for FY27. The stock is trading around those levels, but then we had not factored in the purchase from Paytm. You could probably see them do wonders with that. But I would want to buy this stock on declines, which we are not seeing anywhere just now. But at this point, would you want to sell the stock? The answer is no, because you don't get such, if you sell these stocks, you can never buy them again. So the best way to deal with these stocks is to play the overvaluation. And if they come down, say, to around 210, 220 levels, that is where you get into the stock again.
Okay, got it. So that's as far as Zomato is concerned. How about the other new age internet spaces? Has anything else come up fresh on your radar? We've been seeing a lot of buzz in Honasa as well. Is that looking promising?
So, when the government doles out 3 lakh crores equally split between women and men, what are the women going to do? They're going to buy lipstick, powder, nail polish. And Honasa and Nykaa are the ones who are going to benefit the most. So I believe Honasa at 520 looks fully valued because that is what we are getting. But it's going to be a steady compounder. It'll keep adding 15 to 20% appreciation unless and until they do something more corporate action which can push the price up again.
There is this SEBI study which shows that women are better traders, better investors than men, and married men actually trade better when they are in the company of women. And here you want them to buy lipstick and powder. I think that's a very 80s kind of a thought process. Am I right, Sakshi?
I think they're now also buying something like CAMS or a BSE or an MCX, so they are being equally good as investors in the equity markets too, Vineet. And I'm sure your client list will also tell you how many more women investors have actually come in following you and your advice. No, Vineet?
Yeah, yes, of course. But I couldn't stop,
You know, yeah, you
getting
were saying something.
infected by
Please
Shayle's
continue.
laughter.
नहीं नहीं ऐसा कुछ नहीं है but what's really interesting is that it's better that women buy powder and lipstick rather than men starting to buy them. That would be something a little not to my liking. So we'll stick to the original thesis that Honasa is rising because more and more women are buying lipstick and powder and all sorts of wonderful things that make them look even more beautiful, and we will change the topic. So from your end, Vineet, we are tracking Marksans Pharma as also V2 Retail. Those are the two stocks that you had mentioned when we had the pleasure of your company on August 28th. Are there new research, new stocks that Ventura has done which might possibly have a decent uptick in the next 7 months, 10 months, 1 year, 2 year?
So, we like Quest Corp. There's a lot of action, corporate action brewing there. They're reorganizing their business into 4 new verticals, which will get demerged in a year's time. So there's value unlocking happening there. And it's a perfect play on the government's job creation initiatives that they've taken and the SOPs that they have announced. Although the policy is not in place, but I think one of the biggest beneficiaries of this is going to be the listed plays, Quest Corp, Team Lease, and other listed plays. So we like Quest Corp. We've done research on that. We have a 50% upside on that. Apart from this, another theme that uh, vibes very well with me is going to be the apparel space. So I think the apparels are coming into their own. They're going to be, their direct play on the discretionary spend, which we spoke about. So it's not only the government SOPs, but also the recovery of the rural segment. And to that, V2 gets added. And I think another company which has figured it out, act together, is Arvind Fashion. I think Arvind Fashion is really well placed to grow from here. And I would also like to add the other textile plays, which are going to be a spin-off from the Bangladesh fiasco that has happened. So all the garmenting companies, KPR Mills, Gokul Das, they look good. You might find that they're overvalued, but the export opportunity is huge. You have a $50 billion pie. India is only $16 billion in exports, and even if you can wean away 10% of that, you're adding a 40-50% to your growth. So to that extent, I think these stocks look extremely attractive, and you should be buying them on declines.
Okay, got it. So we will be keeping Arvind Fashions, Quest Corp, all of this in focus, and we will continue to track them as well. Apart from this, if you could also suggest to us, how are you looking at the paint stocks now shape up, Vineet? We've been looking at a buzz, how Asian Paints is coming back. Crude oil, of course, has a big play right there with the dip in prices, and crude as derivative being used is a positive for these companies. But do you think they are now getting ready for a re-rating of sorts? There's a lot of action in the sector, newer players entering in. What would that mean for an average retail investor looking at the paint industry and story?
I think definitely, so 3 sectors which are directly impacted by crude is tires, paints, and the refining stocks. So tires are a better bet than paints because of the impending competition. We have got a good growth market. And the paints also will relatively do well because they are now a upward swing on, more or less the market share stabilizing, market also expanding, because as we said, rural incomes are going to grow. And what do you do with the season? And you have a large wedding uh, planner now than compared to the last half. So we will see more houses being painted, more cars being bought, etc., etc. So I think this also bodes well, and I think these stocks will do well. Asian Paints and Berger will be the top pick out here.
Fair point. 2:50 p.m., ladies and gentlemen. The losses on the Nifty are mounting, but nothing to be worried about. Now down 117 points, 24,925. Nifty Bank is possibly the reason why you see the slippages, because you have the weekly expiry of the Nifty Bank now. 0.5%, less than half a percentage point cut on the Nifty and the Nifty Bank. Hardly anything to be worried about, but these are trying times, and it needs to be kept in mind that skittish global markets are also one of the reasons why you see this 2-day rally being sold into in some fashion or the other. Vineet, let's get your view into these IPOs. Bajaj Housing, what would be a good zone for those millions of investors who will be disappointed by not getting the share? One, is it a counter worth getting into? If yes, then what is a good price to get into the stock?
I think there will be some listing gains and then some sell-off. But I think once that sell-off stabilizes, I think you can buy into this for the long term. Because, now there is no pure play housing finance company of the size of Bajaj Finance that is available to you. HDFC has already got merged. And Bajaj Housing Finance, to my mind, would play a surprise because the entire market's view is sell on listing, right? So I believe that once the price stabilizes after the listing sell-off takes place, I think there would be ground for good growth coming in. Because just like as I told you, the Bajaj Finance is going to get its focus. Bajaj Housing will also have its independent focus. And with interest rates set to decline, I think, there is a veritable cause for, the housing finance boom to continue, and Bajaj will thrive in that.
And apart from Bajaj Housing Finance, also 3-4 more main board IPOs have opened this week. Some of them are also open. If we look at, say, PN Gargil, Tollens Tires, Cross Limited, how are you looking at these new opportunities? Anything else also looks promising to you?
So I will talk to you about one stock which has got listed from the IPO space, and that is Unicommerce. And
Okay.
I think that is one stock which is a very good proxy play on the entire e-commerce boom.
Okay.
So last year we've seen e-commerce boom not grow that much. And just to give you some perspective, China is a 130 billion number of parcels market. India is some 4.3 billion. So, in terms of digital penetration, we have a long way to go. Company has got 4 products where, their ASP per transaction is about 1.3 rupees. And they're, piloting 2 more softwares, which can be an add-on to this, and that can veritably double their ASP. So, you have a CAGR growth coming in, e-commerce exploding, and some very nice growth coming in, next year. So, this is the right time to get into this stock. It's a virtual monopoly. They are twice the size of the next best player. And competition is obviously eroding because of the network effects, getting them more consumers. So I think they've got their cost factor figured out. Operating leverage is set to play out. And, this story is in for a kind of a 3 to 4 year, very, very good outsized returns as a proxy play on the e-commerce boom.
And Sakshi, what's really interesting is that Unicommerce is for the moment right at its IPO price, which was 227 rupees. The stock got listed somewhere in second week of August, and it was a 227 crore IPO. Entirely it was offer for sale. The price band, my apologies, was at 108 rupees. So nevertheless the stock has doubled, but for the full year of 2024, the financial year of 2024, the top line was 104 crores and the company reported a profit of 13 crores. Again, one of those unique stocks that have sort of come up in the how should I say, the internet space. We'll keep an eye out on this one over the next couple of quarters, and maybe also track its statements. But Unicommerce eSolutions, Arvind Fashion and Quest Corp is something that is coming from Vineet's stable as far as today's research is concerned. The market's now slipping a bit further, 260 points down on the Nifty Bank, and Nifty is down 142 points. We are at 2:55 p.m. Given the longer term trends in the PSU space, Vineet, especially on ONGC, are these sell-offs an opportunity to add the stock in the long term portfolio? Just recently it was at 330 rupees. Now today it goes a begging at 277, 280.
So, we had a very good case for volume growth coming in. That was our premise why we were recommending this stock. But this total sell-off has, and it's quite deep in terms of crude oil prices. So, you cannot really put a bottom on this. And, I think 260, 255 is some levels where we could look to nibble but not get into it. Primarily because we would like to see the oil prices stabilize. And we should not forget that we have seen a price of 30 bucks and even negative pricing in the not too recent past.
Right. Okay, we'll keep that in mind as well. Let's look at some other pockets then, Vineetji, to understand from you. Adani Group stocks we haven't revisited with you for a long time. You have been, helping our viewers really assess the Adani Group story right from a long time, more than 1.5 years or so. Help us understand now what is it that your thought process is within the group stocks, and they have been lackluster, they have been consolidating, some of them have been correcting. What should investors do here?
So, I think for the short run, I think the momentum is lost on these counters, and there could frankly be sell-offs. And there are pattern breakdowns chartically, so we could see some lower levels also. So until the overall market sentiment does not stabilize, I don't think these stocks are going to be, going up in a hurry. So we might as well wait on them. Also, there is no corporate action majorly announced by the group. The airport divestment is also been put on, extended by a year to 27, 28. Early we were looking at, FY 26. So, 18 months out, I think the stocks are losing their mojo, to be very honest. But, if you look at the overall growth prospects, I think Adani Enterprise, we have a value of around 4,800 on the stock. So that clearly gives you a double upside from your almost. But, as I said, we should wait for the clubbering to stop.
Don't call.
Okay, got it. 24,900, we've actually slipped further. We are now 140 points lower in trade. It's barring the FMCG sector, rest all of the sectors have actually slipped in deep into the red, with oil and gas, PSU, banks, metals sharply lower in trade right now. Vineetji, another thing that I wanted to understand from you is we've entered the second half of the fiscal year. we are now headed into the Big Bang festive season. All eyes will be on consumption space too. How are you really going to be playing in the festive season? Are there newer names that you would be looking at to play within the short to medium term?
So I think the textile space and the branded apparel space is a very interesting space to watch. FMCG Varun Beverages is one of our favorites. We like Devyani International. I think, in a market where the returns are now kind of not available, I think Devyani International could be a very interesting play. We think that a price of 220 on this stock is quite possible over the next 12 months. So you're looking at a 15 to 20% upside on the stock. So these are some of the new names, Britannia, and the derivatives of Britannia. What do I mean by derivatives of Britannia? I would look at holding companies which are a Bombay Burma trading company, which holds a large amount of Britannia stock, which is the value of this holding is far larger than the market cap of BBTC. So I think that could be a proxy play on Britannia. So these are some of the stocks that come to mind. Nestle is another counter that one can look at.
Well, Nestle is something that is also coming up on the charts because of the rally that you see in two frontline counters, Hindustan Unilever and ITC. Before we let you go, Vineet, your final view on this burst that we've seen on Hindustan Unilever after 4 years on the trot doing practically nothing. Is this something that you're hopeful will now turn into something better for long-term shareholders, and ditto for ITC? What are your views here?
See, we played ITC from 250 to around 460 levels. And after that, we have been away from that stock. We have not revisited them. HUL is still trying to figure it out. And, there are much more better counters that can do well. So, we like Jyoti Laboratories. I think Tata Consumer is a better play. I would have preferred Marico, but Marico is a Bangladesh story. So, in place of that, we like Godrej Industries. Godrej Consumer, sorry. So these are some of the counters that we will pick and choose, and we would also be looking at Emami Pharma, because Emami has a veritable cash pile which it is looking to deploy in the market. So I think these are some of the stocks which will remain my favorites among the consumption theme.
Okay, all right, got that list. Thanks a lot then, Vineet, for being with us on the show and sharing such wonderful insights and ideas. And we always appreciate your time with us. We'll have you back very, very soon to discuss all of these stocks that you've discussed and many more that come forward onto your list as well. Thank you so much. Appreciate your time. All right, viewers, it's time now to shift gears. Also welcome another guest on the show. We have Mr. Sharad Avasthi. He's the head of research at Smiths, now joining right in. Warm welcome to you, Mr. Avasthi. Thank you so much for taking the time out. Well, good time to welcome you. There's a lot of action happening on the macro level, on the global level, on the domestic level. It's been just following the cues of what's happening across the globe. How are you looking at the markets right now? We've managed to bounce back above 25,000. Again, we've slipped today. So is this going to be the course till the time we finally get that clarity from US Fed, or is this going to be a longer time frame trend?
No, I think at max you could be looking, at a month kind of range bound market. Globally, yes, I think most markets have corrected substantially more. We have not corrected that much. Most Asian markets as well as European markets, barring a handful. I think most of them corrected 10 to 15%, 10, 12%, and we only corrected 5, 6% at the bottom of it. So I think the correction's not been very steep here. I think US and India are the only probably large markets which have not really corrected much. Compared to the rest of the space. I think there is a bit of nervousness there internationally because of China and some geopolitics. But I don't think that this is something that is going to have an elongated run. So I don't think you should be too nervous. Rather, we should have an approach of trying to buy the dips.
Ji. Sharad ji, namaskar. A very warm welcome to you. How are you seeing this excessive drop that is happening in crude oil prices? Is this something that is capable of derailing the wonderful rally that we are having in the markets, or just a knee-jerk reaction?
I don't think there should be much of a reaction in India, particularly because of lower oil prices. It is a positive for us, whether it's the trade deficit or other products. You're already seeing some fall off of that in the paints companies. They are rejoicing the fall in oil prices. I think generally what will happen is maybe that you were very bullish about an ONGC and an oil based on static earnings of the next 2-3 years. Now this fall really derails it. So maybe some pockets will face some issues where they are dependent on oil and gas prices. And some GRMs might also take a hit as they have been taking because of demand issues. But I think largely the fall is a combination, of lower outlook or lowering of the outlook for demand, as well as some additional supply that was scheduled to come in. So I think both things have come together, and that is why there is a bit of nervousness in the price, and it's pretty good. And I have been of the view that oil is in a long-term downward trajectory. You had an industry which was growing at a global scale of 3 to 5%. And with renewables coming in, I think if the vehicle or fleet movement largely shifts to gas and electricity, there is a high probability it will substantially dent the demand. So I don't think it's everything abnormal, and it should not certainly hurt India. Add to that lower interest rates once they are confirmed for the next month or two. I think you would be looking at much stronger emerging market flows from FIIs also. That should substantially aid the rally in Indian markets.
Ji. Sharad ji, are you noticing this very sharp rallies that are happening across the agrochemical space, in the chemical space too, stocks like UPL, Epigral, Excel Industries, Advanced Enzymes, so on and so forth, 10, 12, 15, 20% upticks over the last 1 week or so. And suddenly many of these valuations are now in reasonable levels. In your opinion, are there some quality gems still hidden which can be added to the portfolio?
Yeah, I think it's been a long wait for us in the space. They have not moved up much over the last 1.5 years. But finally, I think the destocking story is turning out prettier. And most probably, the numbers that we are seeing right now could see a very sharp revival. But at the same time, you should be skeptical about companies that are trading at 50, 60 times 1 year, 2 year forward. Rather, the companies like UPL you mentioned, I think that remains my top bet. I think that a lot of improvement can happen and valuations are still attractive. If you look at historical numbers, it might not look that good. But once you take into account the type of future numbers they can report with normalization of earnings and the product pipeline they have, I think that's a company that could command substantial premium to vis-a-vis the normal companies in the market. And size also is an advantage for them. So I think UPL certainly remains one of the big bets that I'm betting on amongst the frontline stocks. Amongst the smaller companies, I think Aether Industries, one of the recent listing, I think they have a very unique product profile, which is environment friendly, taking into account future green kind of chemical manufacturing or any kind of manufacturing where chemical is used. It's a greener chemical, environment friendly. So I think that is one company that could have a lot of leg room to move up from here also, though it has moved up a bit in the past 2-3 days. But I think these two companies are primarily what we are looking at. One offshoot could be Balaji Mines. I think there has been a lot of underperformance for quite some time. But as the capex starts to contribute and the number starts to show up, I think there is a possibility that that might also do very well. So broadly, I'm very positive on the agrichem sector. I think a lot of re-rating would happen. And nowadays, there is a trend that when companies report better earnings, you throw valuations to the wind. So I don't know if that happens with chemicals also. But yeah, certainly, I think largely the base formation has happened at the industry level. And the destocking issues are more or less over. This quarter, next quarter, we should see substantial improvement there. add to it some improvement with good monsoons, etc. And I think we could be in for a very good rally in the space. But be wary of stocks which are already trading at 50, 60 times 2 year, 1 year forward earnings.
Okay, got it. Mr. Avasthi, how are you looking at the entire auto story unfolding? And the inventories rising at the dealerships level, discounts surging at a huge level, even on popular models, both EVs and ICE vehicles for most players. And if I can ask you, going for like a second part of my question, Bajaj Auto versus Tata Motors, how are you dealing with the two?
So I think, yeah, the inventory issue is there because post-COVID there was a lot of pent-up demand that the auto companies were dealing with. Then there was the chip issue that came into place. Then there were logistical issues that bothered them for quite some time. But now I think more or less everything is in place, and maybe they have overread the situation. But as we all know, being a country that has many different religions and followings, I think now post the next month or so, we will start to see a lot of down whirlwind in the auto numbers or the inventory numbers, because during this season most sales do not happen in the eastern part. And I think gradually next month also, because of Shraddhs, etc., there could be some slowness. But beyond that, the festive season, I think the inventory should ease out substantially over the next 1 or 2 months for most auto companies. Regarding the discounts, I think unless and until you are assuming them to be a long-term phenomena, if they are a month or two kind of phenomena, just to entice some sales, I don't think that's a very big challenge for most of these companies. And regarding the inventory also, I think it should normalize over the next month or two. So maybe over the month or two, you might receive hear too much speculation about it. But the real picture would emerge once the offtake starts happening just in the festive season or just ahead of the festive season during the Navratris, etc. We should start till Diwali. So I think that's the peak offtake time. And I'm not too bothered about this inventory situation. But yeah, a bit of misreading may have happened because of the over enthusiasm that auto companies must have seen post COVID. And regarding Bajaj Auto and Tata Motors comparison, I think Bajaj Auto, I would say, is fully to fairly valued at these prices. For me, it's hard unless and until the electric two-wheeler component really, gags up very good volumes and breaks up very smartly, which I don't see happening in a hurry. It will take some time to set up the distribution reach, etc. So I think Bajaj Auto at these valuations does not really leave much of a room to grow much. But if you look at Tata Motors, I think today's correction offers you a good entry point. There could be some slowdown, as has been said, and there is a major part of the earnings which comes from JLR. Part of the valuation is derived from there. So maybe there could be some slowdown there. But at these valuations, I think if it's not very cheaply valued, it's not also humongously expensive. And the EV, etc., once FAME 3, etc., is announced, I think that could receive another leg up, and demand should remain kind of good. So I think Tata Motors is an okay kind of bet. You can start nibbling into it over the next, 10-15% correction. You could gradually accumulate it over that period. But Bajaj Auto, I would not be very comfortable buying at these valuations.
Yes, that's a very sensible view coming in. But Sharadji, to the moot question, the Yaksh Prashna, which is Bajaj Housing. One, have you applied? Two, what are the chances you would get it? Three, if you don't get it, where is a sweet spot for long-term shareholders to get into Bajaj Housing?
Firstly, I never applied for IPO. So even Bajaj, I haven't applied. So no question of getting or not getting. And most probably, even if I had applied, I would not get it. The type of over subscriptions we see in fancy numbers. So I think, yeah, in terms of valuations, I would not be very happy buying a Bajaj Finance at these prices. Typically, if you are looking at listing gains. But if you are a long-term investor, I think, okay, you can give it a try. But the type of premium, most probably, or the interest there is in the stock, the type of premium it will list at, I think you might be, discounting 2-3 years in advance. So it will be very difficult to make more money out of that stock after the listing. So even if I had got it, I would have sold it at the listing. And I don't think in the near term you will get a chance to get into the stock because of the fancy the stock and the group has. Regarding the NPA numbers, I think they have run a solid business over the last 3 to 5 years, and it's more of a compulsion kind of listing rather than a willful kind of listing. So I'm okay with it. I think it's a good long-term story. But at current valuations, I think the prices at which most probably it will list, it will not leave much room. If you get it, I think you should use the euphoria at the time of listing to get out of the stock.
Again, a very sensible and not how should I say, mainstream advice that is coming in on Bajaj Housing. Today the subscription levels will be out. Sakshi, my bet is it will be above 1,50,000 crore rupees. Let us see how that works out. But kudos to you, Sharadji. What sensible views you are offering to our viewers. I'd also take this opportunity to request the PCR to please fire the long-term chart of Coforge Limited. Sharadji has been a votary of this stock ever since we saw that OFS, that QIP-led sell-off somewhere like 4,800 to 5,200 rupees per share. And now you have a record high on this one in a span of about 2 odd months. 68.33, Sharadji. Does it still merit a hold from current levels, or are we through with the run-up?
In case you are buying it, for 18 to 24 months, maybe we are through with the run-up. I can't see much upside across the IT stream from current valuation. Maybe the last, 5 to 8% is something beyond my understanding. But if you are a long-term investor, specifically for Coforge, not IT as a whole, I think Coforge, what we have understood or what the management commentary is, if they can pull through those numbers, this is a very good long-term bet that you can continue to hold. So if you can extend your horizon to 4 to 5 years, I think you can still continue to hold. But if you have that horizon of 18 to 24 months at these valuations, I think maybe most of the positives are priced in, not only for Coforge, most of the IT companies, I believe. One or two might be something that I might have missed out. But largely what I look at is most of the companies seem to be fairly and squarely priced for the next 18 to 24 months. Coforge is the same case. But if we can extend the horizon, I think this is one mid-cap name that I think could turn out to be a multi-bagger over the next 4 to 5 years.
Okay, got it. Sharadji, apart from this, if I ask you on, the entire consumption-oriented theme that we have been discussing now, FMCG names have got into some action. We've seen some record highs coming in for stocks like HUL, ITC. Even in the consumer durables, there is a lot of action. Where exactly would you be placing fresh bets when you have to, go after the consumption theme?
I think the frontline names are all, Sakshi, very well discounted at these prices. With bullish markets, that's the problem. Reactions and recoveries happen at a very fast pace. Obviously, the rural recovery happening will substantially benefit Dabur India. So that's why we have seen that outperformance, because they have a larger exposure to that part of the world, that part of the country. But if you look at most names, I think most of them are trading at discount rates, more or less near to their highs. So I don't think they offer much of an upside from current levels. One smaller company where I think a lot of improvement could happen is probably Pratap Snacks. I think valuation wise, it does offer a lot of scope and smaller packages with schools on, and I think most of the demand from there coming in. They got a bit derailed post COVID, but I think with the capex etc. in place and the distribution reach in place, they have a substantial legroom to grow, while the likes of a BKG or something like that, there the valuations have already run up too far ahead. So I don't think they offer much scopes. But Pratap Snacks or Diamond as we call it, I think that is one story that I think has very good legroom to work from current levels.
Okay, got that.
What's really interesting for Pratap Snacks is that it has corrected from 1400 rupee levels all the way down to 850 when this GST cut came in for Namkeen snacks, down from 12% to 5 now. And absolutely at a time when you have seen margins actually improve for Bikaji Foods, Pratap Snacks over the last 2 or 3 quarters has shown a trim in margin. So maybe that's the point of correction, and now it's relatively attractively priced. Sharaji, as always, I make a record of all stocks that you talk about, and we track them electronically as well as in this little blue book. I have some names which you have recommended over a period of time. For the benefit of our viewers, we'll just run them through and you can say whether they still offer value or not. You were with us on 28th of August. You had mentioned Idea Forge. This is again a defense play. The theme getting a bit vitiated by successive selling pressure, but that makes the stock even more juicier at about 690, 700 rupee levels. Does it continue to merit your attention on the long side?
Yeah, certainly. I think it's a very interesting story. They have their own indigenous technology. I think that makes them even more attractive vis-a-vis most of the drone plays that we have in the country. The size advantage obviously plays out. The use of drones in logistics certainly plays out. Though there is a customized way in which drones will be used on the logistics side in India, we are already working on a lot of things. I think this is a multi-bagger idea. I'm certainly holding on to it. I think short-term pain, yeah, certainly is there. There have been some flip-flops, but these are larger station projects. They might take some time. But I think technology is the biggest moat that they have. And I think I have no doubts that this is a space that can grow at 30-35% CAGR easily over the next 4-5 years. And Idea Forge might easily do that as well. So I think, historically, historical numbers, if you look at, you might say that valuations look a bit stretched, that. But this company's bottom line can grow leaps and bounds, and I'm very hopeful that over the next 2 years, the numbers would be substantially different from what they're right now. And once that happens, I think for these companies to get 40-50 kind of multiple when the wind support or they have tailwinds in their favor would not be very difficult. So I'm initially working with targets of around 1,000, 1,200 and maybe beyond after that.
Okay.
Okay. Monte Carlo and Yatra Online.
Yeah, same. I think Monte Carlo, I continue to be bullish. I think they are diversifying into, socks, shoes. I think shoes and their own EBO stores. And continuous growth has always been there. I think the focus is also on online retailing, etc. should work very well. I think multi-brand retail kind of look on Monte Carlo. It's a strong brand on the pullover side, I think. But now gradually, I think it's becoming a multi-brand, multi-product retail company. And the plans are very afford to grow them very handsomely over the next 2-3 years. And valuations, if I look at, I think it is very appealing vis-a-vis the rest of the retail pack. So I think, a company with a brand trading at 26 times last 12 months and most probably the next 24 to 36 months should be very bullish for the company, as most of the rollout that has happened over the last 1.5-2 years should also contribute handsomely. So I'm certainly very bullish. I think these are companies where PE re-rating could happen and growth and earnings should also be very fantastic over the next 18 to 24 months.
Okay. Well, apart from this, one more theme that I wanted to understand from you is the pharma space, Sharadji, which recently got in an uptrend. Now, all the three segments, we've been seeing some traction, be it the hospital stocks, diagnostic stocks, or even the frontline pharma names like maybe a Biocon or a Syngene or a Cipla for that instance. How are you looking at the opportunities there, and what would you advise?
I think the recent buzz has been around the changes in some laws in the US, some restriction on some of the Chinese companies, which open a can of opportunities for many CRAMS players. So I think companies like Syngene, Piramal Pharma could benefit a lot. But on my understanding, I think if I look at the whole bunch, I would not be very happy buying into the frontline names, barring probably a Dr. Reddy after this acquisition, where there could be a lot of opportunity. Regarding this new CRAMS opportunity, which could become a very big opportunity, companies like Piramal Pharma, Syngene, But Piramal, since 80 rupees, we were looking at a target of somewhere around 180, 200. It's already gone above it. So I think at current prices, I would not be very happy buying into a Piramal Pharma or even a Syngene or a Divi's. I think valuations are more or less up to the mark. Once this change in US regulation comes into effect and starts impacting the numbers, we will review that. For the current level, I think within the large caps, I would continue to stay with Dr. Reddy's. In the second rung names, if you want to go with something, I think Biocon, I'm very bullish on the biologic space. The numbers might take a bit of time, but the recent acquisition that they've done, recent gap, so it's been some time. But I think that acquisition and the attractiveness of the biologic space, I would continue to bet on Biocon. I think there could be multiple re-rating on the basis of numbers that the company reports over the next 1.5 years. So Biocon on the next rung and Dr. Reddy's on the first line of stocks. Dr. Reddy's typically on the margin of safety and the recent acquisition, and probably some improvement on the India business.
Sharadji, FMCG of course is one sector that you won't possibly touch with a barge pole given the valuations. But does this move on Hindustan Unilever enthuse you because of changing in rural dynamics, maybe better demand coming in, good monsoon, elections in 5 states? Does it merit a view after a 4-year hiatus from gains?
Sir, the points you are mentioning, I think all of them are playing in favor of lever, certainly. But at these valuations, I don't think even that ice cream business sell-off is a very big trigger for the company, because in terms of their total size, it's not that big. And the rest of the issues, yeah, they might be a bit helpful, particularly raw material price pressure could be something that the company could benefit out of it. But all said and done, I think when you're trading at 50, 60 times, you really leave very little on the table, and that also on forward earnings. So unless and until your forward earnings are re-rated by 15-20%, which you all understand is a difficult job for a company of the size of Lever. So I think it doesn't really make sense for me or most people to really buy into these companies unless and until a fag phase comes in where you start to value them, at 70, 80 times. So that will give you straight away 20, 30% upside from current levels. But I don't foresee that happening in the near future.
Okay. Well, apart from this, Sharadji, if you could also help us understand, are you also keeping some cash component right now, just like how we've been getting a sense that, a lot of ACE investors are now building up on the cash in their portfolio. Is that a sensible thing for even the retail investors to do right now?
Yeah, certainly. I think you should have around anything between 20 to 30%, depending on your risk appetite, into liquid assets. In case you do get a correction, that's fine. In case you don't get a correction, I think even then, prudent asset allocation would tell you that we are trading at all-time highs in terms of valuations. Not at all-time highs, but near to the upper quartile of the investment trajectory. So I think, 20 to 25% or even 30% cash levels is something that's advised as a prudent strategy for most people at these levels. We are also advising the same to our clients.
Okay. And before we let you go, Sharadji, your view on the Nifty for the second half of the financial year. Where is it headed by, let's say, March FY25?
Well, I think another 15 to 20% maybe from current levels is very much possible. Whether it's happens in December, January, or March is a call that is open to everyone. They can take a call. But I think that with interest rate cuts, FII money returning, a lot of momentum should be on the equity side, globally as well as in India. So I think this is a launch pad. We are preparing for a year-end rally, calendar year-wise. And I'm hopeful that we might see, anything between 15 to 20% upside from current levels.
Okay, ladies and gentlemen, and thank you, Sharadji. From your end, we've added to your tally Balaji Amines and Ether Industries on the chemical space. They merit a long-term attention, and of course from the snacking center you have Pratap Snacks coming in. From the pharma space it's Biocon. Thank you so much for your time. As always, we've maintained having you on the show adds that bit of wisdom, bit of sense and common sense to stock picking. Thank you so much.
All right.
With that,
so-
ladies and gentlemen, let's start
Yes.
now wrapping the market. Yes, Sakshi, please continue.
So about 100 points of a cut right there, 24,936 on the Nifty, and the US futures are already indicating about a 200-point cut. So we have to really look at how the global markets will shape up tonight to be giving us a cue for tomorrow. But right now we've given up the gains of the morning, slipped towards the low point of the day, 24,950 on the Nifty, and the Nifty Bank also down by 156 odd points, about 0.3% of a cut. Barring FMCG and consumer durables, all the sectors are down in the red. Sharply lower are the oil and gas sectors, the PSU banking names, metals names, media stocks, autos, realty. All of them upwards of 1% cut is what we have seen for these major sectoral indices. Bajaj Auto was an outperformer, 4% higher. 11,430 odd levels currently for Bajaj Auto. Asian Paints, Bajaj Finserv, Shriram Finance, Britannia Sun Pharma are the other names that have been hovering higher. Tata Motors, however, ends the day 5.7% lower. 976 is the current level. This is the 9th straight session of losses for Tata Motors, and this could have been, probably we'll just cross check on that, this could mean the longest losing streak for Tata Motors in a decade and over that as well. So look at that too. ONGC, Adani Enterprises, Wipro, Adani Ports, L&T and NTPC were the other top drags as far as the Nifty is concerned. We'll wrap it up at that. Many thanks viewers for being with us, but we'll continue to get you all the news beyond the stock market hours as well. So stay tuned on Business Today Television.
भारत दुनिया का 8वां देश है जहां ग्लोबल सेमीकंडक्टर इंडस्ट्री से जुड़ा ये भव्य आयोजन हो रहा है और मैं कह सकता हूं कि दिस इज द राइट टाइम